Hey everyone, it is Pip Popperay, and I'm going to teach you, I want to share with you some of the major pattern recognitions that you can find using for GC1 or gold. Now, this pattern is very similar in a lot of other uh, a lot of other futures you may be trading, like NASDAQ. However, this is the one and only pattern that gold abides by. Um, Unlike NASDAQ, where you'll see a lot more structures like head and shoulders, right? Um, Gold will primarily only provide you with M's and W's. And you'll notice over and over and over again, where as we have right here, we have big M into this W, but this was kind of just a drop down, the same way that it would have been on its way up, a drop down into that main W, right? Same thing here. We have our M, our first drop, a little W, and then a push up, or if you will, just think of this as a bigger W and that drop, right? So you get like a little bit of a V, then your W. All right, so we have our drop, and then we have this. You can see there's a W being formed right now. Boom. Going into that way. You have another one here. All right. Let me zoom in on this a little bit. And another one here. This is on the 15-minute timeline, but here's your M, here's your drop, there is your W. Okay? Now, it doesn't always look exactly the same. And it doesn't always, it's not always easy to spot, but how do we help spot these even when they're not that easy to spot? Well, we use our resistance and support levels. So our resistance and support levels will always want to come back and get hit, right? So you can see here, came back to test this market, came back, bounced right off the bottom of this before trying to jump up, test this resistance again, come down and try to catch this area, and now it's coming and trying to touch all of these other areas. So is gold going to keep coming down? I would say eventually, but if we know anything about this M and W shape, even if we go to the 1 minute, we see the same thing, right? We see the same thing. So we have, right? So we have our drops. You have a bit of an M top here. You have your drop. You have these big W's at the bottom pushing up, right? And just over and over and over again. You can see these M tops coming down into these little W areas. And generally, you can see based off of the angle of the bottom of the W, unlike with NASDAQ, the angle of the W will tell you which direction it's going. So if you can see here, this W is pointing up. It's coming upwards. But let me show you the alternative. So you can see here that this W is actually kind of lower. And if we zoom out on it, you kind of see a W here. There, right? Or even just here. And notice how it's angled this way, right? Notice how these W's are angled that way. All right, notice how this W, the lower, the higher, is angled that way. Okay, so when you start noticing that reversal is, if you notice on our big W here, boom, 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 Okay. Now what happened here? This started to change. We started noticing that first sign of this W kind of right here, trying to push back up, even though coming down and doing this. Then we have our official sign of these long wicks right here on the bottom. Really, really big pushbacks. Now creating a W in the opposite direction. Boom. Okay. So this is also, you gotta squint your eyes a little bit, but this is also one big W. And you'll notice that this low is higher than this low. So that's really, really good sign for that reversal. And look at boom, 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 boom. Now you start seeing these bigger W's. Again, the lower is here. These bigger W's pushing upwards, moving up into this area. Okay, the W is pushing upwards, moving up over here, and watch the reversal. Now we have this first, this is why you always have to pay attention, that this has been unchecked. Unchecked support. So we know that it's come up here. I know that at some point it has to come back down here. And if I'm looking at the 15, we generally get this 1, 2, 3 bounce. Watch this. So, or 1, 2, 3, 4 bounce. It's generally about 1, 2, 3. So you get that first drop, big reversal, 1, 2, this could be 3, but 2. And then this will be the third one that really bounces. And you'll see it here. So 1, 2, kind of the third one, and that fourth bounce before jumping back up. All right, and that happens over and over and over again in tons of scenarios. Right, we get that big drop. This even works on NASDAQ. So drop 1, 2, 3, and then maybe you call that the fourth one before moving and breaking the high. All right, the 1, 2, 3. Here's your fourth one, breaking the high. So that'll continue to happen, where in any moment that you can be wrong, the reason that you will be wrong is by not paying attention to untested support levels. So if it does that, right, the higher it comes up, the longer it's going to fall. If it does that, even here off of this M, if you notice that there's an M here, boom, 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 1, 2, 3, 4, broke the high. See that? Even in creating the M. So that's a really good way to identify which way the market's going to go or what the next move is going to be. But look at the untested support and resistance levels. So right here, 1, 2, 3, I could imagine that this is probably going to bounce up. If not at right here, maybe it comes down lower and bounces off of this lower point and then jumps up and smacks the top of this ridge right here. And that is the pattern recognition for gold.